Good afternoon and welcome to the ASEAN Midday Market Watch. Our guest today is Kelvin Wong, Market Strategist at CMC Markets. Hi, Kelvin. Welcome to the show.
Hey, hi, Brian.
Now, before we speak and get your insights into how markets are performing, let's take a look across the region. Now, we've got close to home, the SGX is up 0.29% at 3,174.6. Bursa Malaysia is at 1,578.99. It's up 0.35%. The sea of green continues across the region. Nikkei is at 29,396.52. It's up 0.75%. Shanghai Composite is at 3,436. It's up 0.25%. Hang Seng is at 28,699.85. It's up 1.13%. ASX 200 is at 6,819.3. It's up 0.43%. And rounding off the numbers, we've got the Kospi at 3,085.16. It's up 0.75%. Kelvin, what's your view on markets performance this morning?
Yeah, because if we look at the kind of ongoing, we call it pretty much positive. So what I could see over here is that if we were to look at the last 2 to 3 weeks of performance, especially on the ASEAN market, it's kind of a mix to muted, probably due to this Q1 portfolio adjustment. So what I could see over here is that it kind of a positive rosy start for the next Q2 that is kickstart today in the Asia session. And one thing pretty encouraging is the Chinese related market, especially the Hong Kong, the Hang Seng Index, the Hang Seng Tech Index, as well as the China CSI 300, all that pretty positive. I believe that it's still riding on the coattails or what we see two rosy key economic data that's out yesterday, which is the official this MBS China PMI data for March, as well as the non-manufacturing, both for the non-manufacturing and the manufacturing PMI, both are actually exceed expectation. So that could actually add on this ongoing positive feedback loop that we see in the market so far in this today's Asia session. Yeah. So overall, I would say it's a kind of a positive start for the next quarter Q2.
Now, one of the things is also the positive start is the new Biden $2 billion stimulus plan that's just been announced overnight. What does this, can we walk us through some of the key points of the stimulus plan and what this means for markets?
All right. So I believe that it's still a plan, right? It's yet to be approved. So it's about 2.3 trillion. So part of it actually goes to clean energy. We talk about electric vehicles. So that could actually give a boost to electric vehicle stocks. So we could see a Tesla yesterday is up by a fair bit, about 3%. So kind of a what you call it, lead to this kind of optimism for electric vehicle stocks, because if you look at the last 1.5 months or so, there's been in a kind of a medium-term downtrend for these stocks. So a bit of consolidation or sideways for this this electrical vehicle stocks, which is pretty much important to actually maintain the ongoing sentiment for the overall market, because we're talking about flows wise. The last 1 year or so, we see a huge number of inflows into this particular set of electric vehicle stocks like Tesla. So definitely, if we're able to see some kind of positive feedback loop feeding back into Tesla, it could actually hold the market overall as per se in terms of a positive sentiment going forward in Q2. But nevertheless, one thing that is pretty much a concern will be the tax, because definitely we talk about 2.3 trillion plan. Someone got to pay for this tremendous amount of plan, which is spent over 8 years. So what Biden actually proposed is to actually increase the US corporate tax hike from 21% to 28%. So that's quite a fair bit to see. So going forward, right, if we were to look at in the last 1 year or so, in fact, one of these positive catalysts to drive the US stock market in the last 2 years during the Trump administration was a big push for a tax reduction. So as you all know that this ongoing Biden infrastructure stimulus plan is not permanent. It's about 8 years, of prior to 8 years. But once the tax hike has been implemented in place, that will be permanent. So what I will see over here is that in a couple of months, there will be this horse trading ongoing in Congress to settle a ballpark figure of maybe less than 28%, because based on some of the speeches made by these Republicans senators, they are not quite keen on increasing the corporate tax hike to 28% as per se. So we got to watch it from there on the tax rate. Yeah.
Now, this is also obviously going to have a short-term impact on the US dollar. What is your view on the US dollar moving forward?
Okay, so definitely, right, we're talking about number one, with this amount of deficit coming into place. We talk about firstly long term. Long term, it will be actually be negative for the dollar. But what we are saying now in a very short term perspective, right, in fact, the dollar is now turning rather positive in terms of a multi-week perspective. We talk about 1 to 3 weeks, up to a month or so. Yeah, because number one is probably driven by the strength of the economic data that is coming out in US versus the rest of the world, and as well as also the rate of vaccination take-up rate, which is so pretty much significant over in Europe right now. So that's why that could explain the ongoing short to medium term dollar strength. So definitely, what we are watching over here for the US dollar will be tomorrow will be non-farm payroll data that is coming up tomorrow. So if you could look at the prelook to non-farm payrolls data as a precursor, will be yesterday's the ADP, that's from the private sector. So ADP data for US, right, is a job data as well, but as well is calculated by the private sector, is up pretty remarkably as well. So it showed an increase of 517,000 net addition increase. So that's the fastest pace since September 2020. So that could actually give a kind of a pre-signal for a positive NFP out tomorrow on Friday. So what the market expecting is a consensus between 680K to 650K, up from 649K in February. So if that were to meet consensus reading, well, that will be a biggest jump in 4 months. So all in all, what you could see is pretty much positive for the US dollar. So what I'm expecting that this ongoing dollar pace to actually continue, at least in the short to medium term. So I'm looking at the US dollar index to actually test the next resistance at 94.50/94.70. So that could be equivalent to the euro dollar, means the euro per USD rate. The euro dollar rate at this support at 116 level. So if we break below 116, you could see the euro dollar depreciate against the USD much further to the next key support at 1.1450. That's 1.1450 level.
Now, Kelvin, thank you very much for your insights.
Thank you, Brian. Yeah.
Now, we've been speaking to Kelvin Wong, market strategist at CMC Markets on BizTech's ASEAN Midday Market Watch. I'm Brian Fernandez. Check out www.biztech.asia for business and technology conversations.